Hi everyone, my name is Natalie and I'd like to welcome you to our second and final webinar on the Corporate Emissions Reduction Transparency Report for this year. Please note this webinar is being recorded and it will be published on our website in the coming weeks. You can now also find the recording to our first webinar on our website, and we'll pop the link to that in the chat in a moment. I would also like to start by acknowledging the traditional custodians of the many lands from which we're dialing in from today. I'd like to pay my respects to their elders, past and present, and to any Aboriginal, Torres Strait Islander and First Nations people joining us today. My colleagues and I are in Canberra, which is on the lands of the Ngunnawal and the Ngambri peoples. We acknowledge and respect their continuing culture and the contributions they continue to make to the life of this city and this region. So our last webinar provided an introduction to the CERT report, an overview of the pilot's outcomes, and summarised the key changes for the 2023 CERT reporting period. Today, we'll be going into those changes in a little bit more detail, with a focus on reporting requirements for potential and ongoing participants. Please note that as such, this webinar will be a little bit more technical, and not all of today's content may be applicable to your company's situation. Joining me today are my colleagues George and Paul. George will be speaking for the second half of the webinar, and Paul will be moderating and asking questions. Today's webinar will run for around an hour, so we've allocated time for questions both halfway through and at the end of the presentation. To submit a question, please open up the chat box using the little Q&A function, and it should appear at the right of your screen with the potential to type in your question at the bottom. All questions will be private unless shared by our team, and you can also ask them anonymously. Finally, if we run out of time to answer your question today, please send us an email at cer-cert@cer.gov.au. So today, and I'm just hoping that my screen is now visible, we'll be presenting on a few different topics, some of which we covered off briefly in the last webinar when we spoke about key updates. So the first one will be providing a little bit more detail on independently assured commitments and revisions to base period emissions, but we'll also be talking about how to report using adjustments, which is for equity share or calendar year reporters, how to report your renewable on-site electricity consumption and use, as well as a little bit more detail on unit and certificate surrenders. The Q&A will be after section 2 on base period emissions, and again, there'll be another one at the end. So for a little bit of background, what is the CERT report? The CERT report is it's a report administered by the Clean Energy Regulator, and it leverages upon the data we collect under our schemes. Those being the Renewable Energy Target, the National Greenhouse and Energy Reporting Scheme, and the Australian National Registry of Emissions Units. The CERT report also allows companies to publish their emissions reduction and renewable electricity commitments, and we use either our data holdings or you can use an independently assured data to transparently present progress towards your emissions reduction or renewable electricity commitments. Each company's CERT report also provides an overview of their company's unit and certificate surrenders, and the CERT report provides an easy way for companies to improve their alignment with international reporting frameworks, including the Task Force on Climate-Related Financial Disclosures and the Greenhouse Gas Protocol. So in terms of what's included in a company's CERT report, I mentioned before that we allow progress towards the achievement of your climate-related commitments. So this is a little sort of preview of what that looks like here. We also show units and certificates. Now this is both by unit type as well as by origin, so whether they're Australian or international units. And we also, for each controlling corporation that participates, have a net emissions table. So this shows both their gross scope 1 and 2 emissions under both the location-based and market-based accounting methods. And I spoke about the differences between those methods in our last webinar. So in terms of some key updates for this year, we'll be recognising independently assured commitments as a third category of commitment. And for that, you can present your progress towards your commitments, similar to how you would for a CER data verified commitment. We've also introduced a jurisdictional renewable power percentage, or a JRPP, which recognises jurisdictions across Australia that have a renewable energy target. So for the 2023 reporting year, this will apply to the ACT. We've streamlined equity share and calendar year reporting requirements based on feedback during the pilot that these reporting arrangements are a little bit more complex, and so they should be easier to participate in for the 2023 reporting period, and you'll have a few different options for how to present these as well. We're also allowing revisions to base period emissions for companies that have undergone a significant change to their corporate structure or their emissions accounting. And we've improved the methodology for calculating the residual mix factor, as well as our treatment of ACCUs delivered under contract. So, independently assured commitments. Those of you who would be familiar with the pilot cert report, and we'll pop a link to that in the chat as well, so you can go and look at pilot outcomes, would be familiar with the two commitment types that we had for that year. So these were commitments that could be verified by Clean Energy Regulator held data, or we had company assured commitments. So these may apply, say, to your international emissions or Scope 3 emissions, also emissions intensity commitments, basically commitments where the Clean Energy Regulator doesn't collect the data under its schemes to be able to verify progress towards the achievement of that commitment. We'll still be offering these two types for the 2023 reporting period, but we're also introducing the third category I mentioned, called independently assured commitments. We recognised during our evaluation of the pilot that many participants had already sought independent assurance of their data, and so this is an option for them to recognise, as I mentioned, their Scope 3 or their international emissions, and to transparently present progress towards how they're progressing towards that commitment. So as you can see, independently assured commitments are fairly similar in view to CER data verified, but they do have a little assurance box down the bottom where we explain what type of assurance has been sought, who it's been completed by, and what accounting methodology is being used. A new update for this year is that anyone using company assured commitments will also be able to have a progress statement in lieu of a progress bar, in addition to their company and commitment progress sections. So in terms of requirements for independent assurance for those interested in this option for the current reporting period, we recommend we allow limited or reasonable assurance of Scope 1, 2 and 3 emissions, although we do recommend reasonable. We also have 5 assurance standards that we accept, and I'll get to those in a moment. And as part of our inclusion of independently assured commitments, companies must also supply their assurance report to the agency, and that allows us to verify that the assurance has been conducted in accordance with the standards outlined in the cert report guidelines. So in terms of what assurance is required, I mentioned that limited or reasonable. And in terms of what has to be covered, it's really emissions and energy data as relevant to that commitment. So for example, if you have a Scope 1 and 2, say a Scope 1, 2 and 3 emissions reduction commitment, then we'll need to see assurance over your Scope 1 and 2 and 3 emissions during both your reporting year and your base period. That means that if you have adjusted your base period or any other changes have occurred to your base period, or even if they haven't, we will need to see an assurance report over your base period emissions. As you would have seen from the commitment tiles I presented a moment ago, the level of assurance will also be presented in company cert reports. So in terms of what frameworks we allow both Australian and international frameworks. So the first two are both published by the Australian Auditing and Assurance Standards Board, which are a government body that oversees the governance of various assurance standards in Australia. These two standards are essentially the Australian equivalents of these two, the ISAE 3410 and the ISAE 3000. So the 3000 range, both the Australian and the international equivalents, are most suitable for companies seeking assurance over, say, their climate or their sustainability report, where their greenhouse gas and energy data may be one aspect of that report, but there are other aspects that are also included in that report. For companies seeking assurance over their greenhouse gas data specifically, we recommend the ASAE 3410 and or the ISAE 3410. So both of those are simply the Australian and international equivalent. We also accept the ISO standard on greenhouse gas statements, which we recognise is a little bit more common in other parts of the world or for international corporations. So in terms of what information must be provided to the CER, if you'd like to report an independently assured commitment or independently assured data as part of your CERT report, we'll need to see evidence of the assurance provider, the nature of the assurance engagement, so again, whether that's limited or reasonable, the standards used, so they were the ones I talked about a moment ago, the ASAE 3000, 3410, etc., and the applicable criteria or the accounting methodology used. Please note we aren't prescriptive about the type of accounting methodology, so whether it's ENGA, whether it's the Greenhouse Gas Protocol, GRI, etc. And we also aren't prescriptive about the assurance practitioner, provided that the assurance has been conducted in accordance with the assurance standards that we accept. So all of this information would usually be part of a company's assurance report, but this will just need to be included as part of your reporting form for your submission. So in terms of base period emissions, this is a new change for the 2023 CERT report, and we recognise that it's also something that has just been implemented for Climate Active for companies that report under both schemes. So a base period is essentially the year or years from which progress towards your commitment is calculated. So emissions reduction commitments will typically have a base period, whereas renewable electricity commitments, say, may not have a base period. They might be calculated as the share of renewable electricity your company hopes to use as a proportion of its total electricity consumption. So where a commitment is calculated from a base period, why we're introducing this change is to allow for meaningful comparison of companies' emissions over time. So essentially, if a company has made a significant change, such as they've acquired a new business or they've made a significant divestment, revising a company's base period emissions allow us to track year on year the extent to which that company's decarbonisation journey is attributable to actions of that company, and therefore allowing progress to be accurately measured. So please note that you don't need to revise a base period in all circumstances in which your company may have gone through a merger, acquisition, a divestment, etc. It's really when it meets the materiality threshold of 5%, of a 5% change in your base period emissions. So this could be, say, if you've acquired a facility and or you've changed some emissions calculations, it's really about the aggregate of those changes. So if you acquire a new facility and that facility's emissions at the time of your base period would only be, say, 1 or 2%, then there's no requirement to revise your base period. The discovery of significant errors is also something that should be reported to us. And if you're using ENGA adjusted data, then we know that this should have already been picked up by ENGA and reported to ENGA under the as part of the ENGA scheme. But these are essentially the circumstances, and the reason we've adopted the 5% threshold as well is to mimic that required under the Science Based Targets Initiative and other schemes around the world. So just a little image of what this looks like. If you're acquiring a new facility or you have acquired a new facility, essentially the emissions of that facility will be added on to your company's emissions for the reporting period. And in terms of retroactively calculating your base period, it's whatever the emissions of that acquired facility were in the base period that will be added on to your base period. So as such, if you have built a new facility or if you've acquired a facility that didn't exist in your base period, no baseline recalculation is required because that facility's emissions at the time of your base period were 0. So it's only really for facilities that were already operational during your base period. Divestments are essentially the reverse of that situation. So we'd be removing both your base period emissions from the reporting period as well as from the base period at the based on what the emissions of that facility were in the base period. Please note that these diagrams and some more examples will be published in guidance materials that will be on our website next week. So recognizing that's a little bit of content, I'm now just going to pause for questions. Please pop them in the chat, as I mentioned earlier, and I'll now hand over to my colleague Paul to moderate those. Thanks very much, Paul.
Thanks, Natalie. Lots of great information there. We've got one question coming in, so please feel free to keep popping those questions in. Just a first one here, and you should be able to see them in through the Q&A function there. Are we able to share a copy of the presentation?
Yes, so the recording of the presentation will be live on our website, and we'll also be sharing slides for that.
Excellent. Substantive question here. If independent reasonable assurance has been provided for ENGA for the relevant reporting year, can this be used for CERT? That is, are you able to access the assurance from ENGA to avoid resubmitting the same assurance report?
So good question. So I will break that down a little bit. So the ENGA scheme works on operational control reporting of the financial year. Many participants do use those two approaches under the CERT scheme, but the CERT scheme does also allow either calendar year reporting or reporting on an equity share basis. So if your ENGA report is for your ENGA reporting boundaries and you're using different reporting boundaries for the purposes of your CERT report, you will need to supply a different assurance statement. Otherwise, we will need to see a copy of the assurance report, even if this has been through ENGA, and it's just a quick upload on our reporting form. But yeah, it can be absolutely the same assurance report. Paul, sorry, I don't think I can hear your question.
Oh, thank you. Sorry, on mute. Classic. A question here that I don't quite understand, so perhaps the question might need to put in a subsequent question here, but I'll ask it anyway. How will the CERT data be reported in these tables where the ENGA data is part of independently assured data? Does that? Yeah, does that make sense?
Yeah.
Okay.
Yeah, so George will be covering independently assured data later in the webinar, but I will just go back to that table quickly. So this is the data that will need to be provided if you're using independently assured data as part of your CERT report. Although we note that rather than saying this has been calculated, verified by the Clean Energy Regulator, we'll say that it has been independently assured. So there will sort of be that messaging in your company's CERT report. But yeah, otherwise you can supply independently assured data for that year. And I will let George speak to that in a little bit more detail in probably 15 minutes. Thanks for the question.
Thank you. Now, the next one here we have is about SBTi. How does CERT manage companies with SBTi targets? Noting SBTi does not allow use of offsets to reduce emissions. A number of CERT reporting companies in the pilot have or are setting SBTi targets.
Great question. So for emissions reduction commitments that are part of the CERT report, there are a few options on what sort of basis we calculate that. So you can calculate it on a net basis, and this, as you've identified, would show your company's offsets. But if you choose, you could also have a gross only emissions reduction, and this allows us to compare your gross emissions in your reporting year against your gross emissions in your base period. And so that won't show use of offsets. And so companies with SBTi commitments may prefer that approach. Although companies may also advertise where they do have their SBTi commitments, they may provide a link to their SBTi commitment for next year. And so that is something we're introducing as well, just to add that additional layer for companies that are reporting under both SBTi and CERT. But yes, certainly companies can choose a gross only emissions reduction commitment if they choose to do so, and that is a bit more aligned with the SBTi system.
Excellent, fantastic. Just a final question that has just come through here, and as I said, if we don't answer your question now, there will be more time at the end of the session. So final question here for this section. Will CER verified data adhere to the same standards as independently assured data?
Cool, thanks, Paul. So we do have our own internal assurance team that looks at all data submitted under the ENGA scheme. We also have the compliance standards that apply to and our compliance branch that oversees all data submitted as under the Clean Energy Regulators schemes. The ENGA scheme, where in doubt, also conduct reasonable assurance, or rather seek reasonable assurance by an independent auditor of those greenhouse gas and energy statements. So that would be consistent with the reasonable assurance where it's submitted as an independently assured commitment or data under ENGA.
Fantastic. Thanks, Natalie. I'll now like to hand over to George to take us through the next part of the session. Thanks, George.
Thank you, Paul. So now I'd like to talk to you about some of the elements of the pilot that we got a lot of questions on and changes we've made to address some of the reporting difficulties identified during the pilot. The first of which is calendar year or equity share reporting. So for this year, we've introduced a new way to report data for publication in the net emissions table of your CERT report. So that's the table that Nat showed earlier. So in addition to providing equity share details at the facility level or multipliers for scaling ENGA reported data, companies that have had their calendar year or equity share data independently assured can now choose to provide this data instead of using the ENGA reported data. So I'll just go over some of the reporting requirements for if you were choosing the multiplier option. So under the multiplier method, participants work out the difference between their ENGA data and their calendar year data for the most recent reporting year, and then convert this into a multiplier that, when multiplied by their ENGA data, produces the equivalent calendar year amount. So the multipliers that need to be provided for gross scope 1 and 2 emissions, electricity imports, on-site renewables, and other on-site electricity separately. That's a little bit more detail than we asked for last year, where we had just one electricity multiplier. The reason for this is that separating that out into on-site versus imports and renewables allows reporters to reflect a change in their electricity mix, because we need people are putting lots of solar panels on and stuff, and it changes their profile a little bit. We've allowed these multipliers this year to be specified to 8 decimal places. This gives a lot more precision than the pilot offered, so we can get to fine-tuning those numbers a little bit more. Note that for base period calendar years, we automatically calculate these quantities for you based on the 2 flanking ENGA data years. And we've got some forthcoming guidance and examples on how you might calculate a multiplier for calendar year reporting and how it would be applied in the CERT calculations. So we'll be contacting you all when this is available. For equity share reporting under the multiplier approach, basically you need to provide equity share percentages for each facility that was jointly owned, even if reported by another company in ENGA. And these need to be provided for both the current reporting year and for each base period year. Now we define equity share to be based on working interest, which is in line with the Greenhouse Gas Protocol's corporate reporting standard. Again, we've got some guidance coming out around this, so if you've got some questions, we've got sort of a little question answer type thing coming out, so we'll be sharing that soon. I'll move on to the new way to report equity and calendar year data, and that's to report independently assured data instead of using your ENGA data. Basically, under this approach, you'd report the exact amounts according to data that you've had independently assured. So we require you to report the quantities shown on the slide here, and note that these must be reported for Australian activities only, because they go into basically populating that net emissions table, which is presented on an Australian basis. We'll then take these amounts that you've reported and calculate a location and market-based net emissions position and renewable electricity percentage to be presented in the net emissions table. Of course, that accounts for any reported offsets or certificate surrenders as well. Recognising that perhaps if assurance engagements have already been sort of started, you might not be assuring all of these quantities this year. If any of the quantities aren't independently assured this year, you can state this in your report. We'll either choose to not publish the related quantities or calculations, or perhaps publish a note that the data is not independently assured. We're still fine-tuning how we might handle that situation. So if this applies to you, get in touch with us and we can work it out. A note that the reporting of this data here is different to reporting independently assured commitments, because for the commitments themselves, they may use a number of different progress metrics, you know, for emissions intensity commitments or what have you. So that's a bit more of a choose your own adventure. You tell us the progress metric used for the commitment, as well as the reporting year measurement and base period measurement if applicable. We would then calculate and present progress based on that for the independently assured commitments. Again, we've got some guidance coming out on this, so stay tuned for that and we'll share that around. And one final note I wanted to make on reporting independently assured data is that if you do choose to report your calendar or equity data using this option, you won't be able to report any of your commitments as being verified using CER held data, i.e. that's the CER data verified commitments category. However, if you go with the multipliers option for equity or calendar year reporting, you could present commitments as CER data verified because it sort of relies on the ENGA data that we hold. But you could also present commitments as independently assured if, for example, they apply to scope 3 or global emissions or what have you. And in this case, the data presented in the net emissions table would be presented as CER data verified. So that sort of sums up the independently assured calendar year or equity share reporting. I know that's a lot to take in, but we'll take questions on that shortly. I'll move on now to another aspect of the CERT report that received quite a few questions during the pilot, and that was how to report your renewable electricity. Now, the first aspect of this I'd like to cover is the RMF. We have had sort of a few conversations with various stakeholders around changes to the RMF that Climate Active are introducing. Now, if you may have seen that we've put forward or proposed a new methodology on Climate Active's behalf in our recent consultation paper. And so I'd like to talk through a bit about that here to sort of explain what's going on there and why. So the way I like to think of the residual mix factor is it's basically applied to the emissions for any electricity that's not considered renewable. That's called the residual electricity. And it's calculated and released by Climate Active for each reporting period. So in explaining the update, I'd like to start with sort of the national emissions factors. So that's the emissions intensity of all grid connected generation, i.e. the total scope 1 emissions divided by total generation of electricity in the grid. Because some of that electricity can be claimed as zero emissions renewable electricity for CERT or Climate Active, the contribution of that generation towards the national factor needs to be removed, so it's not being counted twice. So to do that, you deduct the emissions related to the generation from that numerator, which of course, because it's assumed to be zero emissions, is no deduction. And then you deduct the generation from the denominator. So that's sort of the second equation you see there in the second line. Reworking that equation a bit, if you do a bit of algebra, it actually works out to be the national factor divided by 1 minus a renewable generation percent. Now, under the old methodology, that renewable generation percent was approximated using the renewable power percentage, which is basically the percentage of electricity that's required to be covered by LGC surrenders under the renewable energy target. But we know that that's not really an accurate representation of the actual renewable share in the grid for a number of reasons. So the new methodology basically replaces that RPP with a different renewable generation percent, which takes into account all LGCs created, not just those that go into meeting the RET, as well as behind the meter small scale generation. So that effectively means that anything that can be claimed separately in CERT or Climate Active is not contributing towards the RMF. So we're avoiding that double count there. In terms of the timing of the change, this is something that's come up a bit in questions recently. So this change won't come into effect until the calendar 2022 reporting year. If you are reporting on a calendar year in CERT this year, note that the RMF used in calculations may not be updated if you come to view the preview calculations in the reporting form. So we anticipate that to be updated in February, which means if you're using the form before that and previewing your calculations, it might not be accurate until then. And just to give you a sense of what the RMF is for the financial year reporting, which is still calculated using the old methodology, it's about 0.897 kilograms per kilowatt hour. I know that's a lot to take in. Again, we've got guidance. I'll keep saying that because I recognise this is a lot of information to take in. So hopefully the guidance will clear some of that up too. Now onto the jurisdictional renewable power percentage, which Nat mentioned briefly earlier. This year, new to the 2023 CERT report, we now recognise LGCs surrendered by the ACT government on behalf of ACT consumers. We automatically apply the proportion of total ACT consumption covered by government surrenders to electricity that's imported and consumed within the ACT. We call this the jurisdictional renewable power percentage, and it shows up in the CERT calculations next to the RPP, and I've got an example of that there. For calendar years, because the JRPP, well, because the ACT government does their accounting on a financial year basis, so the calendar years then just take the average of the two flanking financial years. And then for the calendar year 2022, because we don't have the appropriate financial year data, we just default to the most recent financial year. We're still finalising what the JRPP is. We're very close to finalising that now. It's not 100%. It's sitting around about the 75%, and there's a number of reasons for that. But the biggest being because we count the RPP separately, that adds another sort of 18.5%-ish onto that. And then there's other components of how the ACT actually account for their renewable electricity. For example, below baseline renewables from the New South Wales region come into that equation, but they're not recognised in CERT, or they don't constitute LGC surrenders. They're actually feed through to the RMF, so they became through the RMF. So we can't get to that 100% without doing a double count. So we're taking a bit of a conservative approach this year, but we'll be evaluating the JRPP calculation methodology to inform future design as we go along for next year. So then that brings me on to how to report on-site renewables. Now, this is something that we had a bit of back and forth with during the pilot to sort of make sure we understood what participants were doing, how they were reporting, making sure it's all right. So I just wanted to cover the reporting requirements off there. So the on-site renewables are treated differently in CERT calculations depending on whether or not they're reported in NGER and whether or not they're credited with LGCs. As such, if you are claiming on-site consumption, you need to tell us whether it was reported in NGER or credited with LGCs, so we can do the appropriate calculations. The primary reason for this is because NGER and RET data are managed in different systems and they're not necessarily reported under the same entities, so the data doesn't really mix very well. So we ask that participants report that to us. We can then use that to perform checks and verify that the reported amounts agree with our data holdings. In addition to this, we need to see evidence of the installation and operation of the behind the meter generating system. In the pilot, this took the form of an ABN, but we've expanded this for this year to allow other evidence, because ABN wasn't always available to a participant. Again, we've got guidance coming out on this of what sort of evidence we might require, so keep a lookout for that. Okay, so finally, I just wanted to touch on a concept that, again, generated quite a few questions during the pilot, and that's the treatment of ACCUs issued to an ENGA facility under the ERF. Now, the basic principle here is that we want to avoid any double counting of abatement, right? Now, if a company undertakes an ERF project at a facility, their emissions as reported in ENGA are reduced due to the abatement occurring at that facility. However, the company is also issued carbon credits in the form of ACCUs for that abatement. So when we have a framework like CERT or Climate Active that allows companies to surrender those credits to reduce their emissions, this opens up the possibility of claiming that abatement twice. Once would be through the reduced ENGA emissions, and once by voluntarily surrendering those units to further reduce emissions. So to avoid this, basically we need to add the emissions back onto the company's gross emissions at the point of ACCU issuance. Some of you will be familiar with this, as this is the approach taken under the safeguard rules, and it's also the treatment recommended under the Greenhouse Gas Protocol. So we add them back on, and then they'd be deducted if the company surrenders these units. So effectively getting back to your ENGA reported emissions amount. But if the company sells the units, that means someone else might be able to claim them, and so you wouldn't be able to claim that deduction there. And that brings me neatly to the treatment of contract deliveries. So again, the safeguard companies amongst us will be familiar, but under the safeguard rules, there's this thing called a deemed surrender, which basically stipulates that a safeguard facility that generates ACCUs and delivers these to the government under contract will have the equivalent emissions deducted when calculating their net emissions number. I'll note that in CERT, safeguard entities may choose not to report deemed surrenders as offsets for the purposes of CERT reporting. I'll also note that the recent consultation paper on safeguard reforms has sort of signalled that removing the deemed surrender arrangements is under consideration. Now, wherever that lands, the CERT report guidelines would follow suit. However, we also note that other frameworks such as Climate Active require credits to be voluntarily surrendered to be claimed as an offset, so they wouldn't recognise contract deliveries, and that includes deemed surrenders. So to promote consistency across government and with international frameworks more broadly, the 2023 CERT report won't be recognising contract deliveries as an offset. That kind of concludes sort of our formal presentation. We'll move on to some questions, but I do want to restate we do have that guidance coming out, which will step through some of the more complex reporting requirements. Also note that a lot of the material covered today really does only apply to some of the more complex reporting arrangements. So if it seemed really technical or really scary, don't be alarmed. In the majority of cases, you won't need to worry about any of this stuff. It's just, this is the stuff that came up a lot during the pilot. So we wanted to really double down on getting the information out there. All right, thanks. Thank you. And questions?
Thanks very much, George. Lots of great questions coming in through the Q&A function. Please keep them coming, and thank you for those questions. I'll try and group them into sort of similar themes. But firstly, George, what is independently assured data? Perhaps going back to unpack a little bit more on the slide you had earlier around the independently assured data for the net emissions table.
Yeah, Nat, did you want to bring up that net emissions table again? Slide 22. So we are opening up CERT to independent assurance this year. There's kind of two similar but slightly distinct concepts. One is the concept of an independently assured commitment, That's where the underlying data for the reporting year or base period year has been independently assured, and that can take the form of, Scope 3, global emissions intensity, those sorts of commitments, where you've had that underlying data independently assured. That's a separate thing entirely from what we're presenting in the net emissions table. So in the net emissions table, we're presenting your gross and net market and location based Scope 2 emissions, as well as a renewable electricity percent. In order to be able to present this for your Australian activities, we need to basically be consistent with how we're calculating them to make it comparable, basically, which means for calendar or equity shared data, you report these quantities to us, we run them through the CERT calculations and produce the net emissions table. But that is treated completely independently of the commitments and progress section of your report.
Okay, thank you. You mentioned the Australian emissions. So this is a nice segue to this question. Is the CERT report always going to be just for Australia only? Our company's emissions target relates to operations outside Australia as well. So just wondering about whether they would be included in CERT.
Sure. So I guess to answer that, we're an Australian government organisation. So the data and statistics we present in terms of the information that's on this slide here must relate to the Australian activities of a company. That said, if you do have commitments that are formed on a global level, you can present that as an independently assured or a company assured commitment. If you do that, then basically you're responsible for the data that's in there. It's not CER data verified in any way. It may be independently assured if you've sought independent assurance of that data, or you can provide your own company assurance statements against that.
Great. There's a few questions here in relation to calculation of renewable electricity. So let's start with this one. What is the requirement for including an ABN for renewable electricity on-site? On-site renewable electricity.
Yeah, sure.
So
the idea behind this one is that the Clean Energy Regulator should be able to see evidence of the generation and operation of that system in the REC registry. So that's our own internal data holdings, where we have data on all the small scale and large scale renewable generators that have been registered. So that ABN would relate to the REC registry account holder that registered that system with us.
And I think that relates to another question there as well, which is, can we use EGR lodgements? So it's electricity generation return. So that's exactly that matching up that George is talking about.
Yeah. Again, and I think I mentioned earlier, the Anger data system and the REC registry don't marry up very well. They're separate schemes. One's on calendar year, one's financial. The data is often reported at a different level of a company. It's not super easy for us to automatically marry that up. And so that's why in the reporting form, we've asked a few simple questions around the generation of that data that allows us to then join that up with your Anger data to produce your CERT position. So in short, no EGR lodgements aren't sort of factored into that.
Thank you. Just a question here related to the RMF, the residual mix factor. What about emissions associated with transmission and distribution losses? Should they be included in the RMF? I don't know if that's really a question for us.
Yeah, that's probably more a question for how the RMF is calculated, which is, again, as I mentioned, Climate Active are calculating that. And it also ties in with how the national emissions factor is calculated, which is a question for the Department of climate change energy emissions.
Great. There was a question here around LGC creations, but I think that was covered off in your later slides. So I think that's covered. Please keep these questions coming. These are great. Now, there's a question here about, is there a possibility of data or portions of data being reported more than once? I'm taking that to mean reported more than once under CERT rather than under different reporting arrangements. George, do you have any comments in relation to that?
I'm unsure if this is related to sort of claiming the same offsets by different parties, or whether it's talking about reporting the same data in consecutive years, for example, for your baseline data, etc.
We might have to, if you have a specific question on that, it might be best to send us an email. A question going back to assurance. So the independently assured commitments that we were talking about earlier as well. Will the assurance document provided as part of CERT reporting be used by the clean energy regulator only? That is, it wouldn't be published.
Yeah, that's correct. So that's only for us to be able to check that against the information reported in your CERT report. So it wouldn't be published.
Thank you. We have a question here around reporting of gross emissions and offsets, but I think that has been addressed through later slides. We have a question here about the commitment types. Do the commitment types compete in part with the climate active scheme? So maybe George, if you can talk about how CERT and climate active relate.
Yeah, certainly. So CERT is same but different. It's similar in that we're aligned from an accounting perspective as closely as possible, but different in that CERT provides the opportunity for companies who have not yet hit that carbon neutral goal to present how they're tracking towards it. It's certainly possible for, and we did have some during the pilot, for a company to be climate active certified and to report that in CERT. And they do, I wouldn't say they compete, I would say they complement each other. And as Nat mentioned earlier, this year we're offering the opportunity for people to specify in their CERT report where they might be reporting under other frameworks. And climate active is one of those. So if you wanted to report your climate active carbon neutral commitment in CERT, you could do so. You could even provide a link to your public disclosure statement to take readers there.
Excellent. We've got time for one or two more questions. Question here, we've been mentioning that we'll be publishing quite a bit of guidance. So this is a question in relation to that. Will the Clean Energy Regulator provide guidance on net zero emissions reporting? Currently, no guidance is provided and can lead to double counting to emissions reduction through, for example, location and market-based accounting. George, do you want to maybe just talk through some of the guidance that we'll be publishing shortly?
Yeah, so the guidance is basically sort of broken up into two main sections. The first being guidance on how to report in CERT for various complex arrangements, and that focuses on the independently assured commitments story, reporting equity or calendar year data, reporting on-site renewables, as well as revising base periods. The second part of that, which is the supporting examples, talks through some of the accounting principles and calculations that we use in CERT to produce that final net emissions position. I hope that's answered your questions. Right, yeah, on this slide here sort of explains what we look at. So there are one or two examples on what happens in the event of being issued ACCUs under an ERF project, when you can and can't claim those in CERT. So yeah, I think that will hopefully answer some of those questions.
Excellent, thank you. Okay, I think we've run out of time for any further questions at this stage. I do see a couple more come in with some technical questions around base periods and reporting of different types of emissions. So sorry, I'm just reading these as I go. If you do have any questions, please do send them through to cr.cr.gov.au. We're absolutely always happy to answer further questions at any time. Can I hand back to you, George, to then take us through where to from here and to close out the webinar?
Certainly. As well, so the opt-in form is up there on Client Portal if you'd like to opt in. Simple 10-minute form. It'll be a breeze. This slide here says reporting is now open. It is very soon to be open. We're hoping to get that live by the end of today, so stay tuned for that. We'll flick out an email to everyone once that is available as well. I'll note that if you're a pre-existing CERT participant, that is, you participated in the pilot, we're actually going to be creating a draft form for you based on last year's submission, so you don't have to fill out all your commitment data again. It's all sort of in there, ready to go. You just need to add or remove surrender details or things like that as required. So yeah, by opting in, you can be a leader in your industry, be a trendsetter, help shape the pathway for climate reporting initiatives moving forward, as well as telling your decarbonisation story through a framework that's supported by the Clean Energy Regulator and that broadly aligns with international standards. And it also allows you to present to your stakeholders your progress towards your climate commitments using trusted agency data or independent assurance. And as it says there, participation is open to companies that report over 50 kilotons CO2 equivalent under the NGER scheme. I think that's about it. Again, I've probably done this to death, but we've got guidance coming, so we'll let you know when that's available in the coming week or so. Thank you. And as Paul said, if you've got any further questions, please feel free to reach out to us at the email address shown there, or contact our contact centre via the phone number there, and we'll be happy to answer any questions or provide any assistance that you need in opting in or reporting. Thank you.